This is your morning jolt, and day two looks like again we have our real money executive editor Daria Solovieva. Now she's working with an intern in the Bloomberg terminal, so it's good to see them looking for the latest and greatest news. That's always top of mind. But I have three things you need to know to get your market started right. First up's on the market. I think you got to start putting on some of those Trump trade war trades. The Street listed 50 stocks a couple weeks ago that could be impacted by the Trump trade war, by a possible Trump trade war. That's McDonald's, that's Starbucks, that's companies like a Qualcomm, companies with outsized China exposure. Now, why am I bringing this up? Because Trump came out last night, it was leaked to the Wall Street Journal, that he may be looking at removing the exemptions for EU tariffs, which 25% steel, 10% aluminum, if I have my numbers correct. And I think that might just ultimately spark renewed talk of a trade war within the market. Why not be prepared before this happens, before you get your face ripped off with all these long positions you still have on? Next up, looking at my notes, Sears. The Street has been warning about Sears for probably over 6 years, and we're going to continue to sound the fire alarm on Sears. The company came out with an absolutely dreadful first quarter earnings performance today. Just really not good. Sales down across the board. $2.9 billion in total sales versus $4.2 billion last year. Company continues to close more stores. In fact, on that front, it said it has identified 100 unprofitable stores and will close 72 of them starting this quarter. What that means, they'll probably close another 100 stores by the end of the year. This company, it will probably, by the end of the year, close close to 300 stores. That's absolutely mind-boggling. But when you dig into the 10Q, as I did because I have no life and this is what I do, you'll see a company that really needs cash and need it quick, or they may not make it to the holiday season. They have about 186 million in cash. They have 20 million, only 20 million left in their credit in terms of credit availability. That's pretty disturbing. Sears needs to work up a deal, or you're concerned if they even make it to the holiday season. Last up, third thing, Boeing. I mean, Boeing has been one of the best stocks to own over the past year. Stocks up 90%. Why? The commercial aircraft market is strong. This company is showing that they are one of the best-in-class innovators, and you thought innovation just happened in Silicon Valley with Apple, Alphabet, Facebook, Netflix, and Google, and all those companies. No, Boeing's been absolutely crushing it. The Street will have Boeing CEO Dennis Muilenburg exclusively for an interview around noontime. That video will probably publish around 1 p.m. Expect to have him for about good 10 to 15 minutes. We'll talk about everything from trade to innovation to the future of Boeing. I am really pumped to talk to him. Last up, we have the Morning Jolts tip of the day. What is that tip of the day, you ask? It is respect the word trade war. I did a story last night. It's on TheStreet.com homepage, looking at when the news media uses trade war, has used trade wars in their headlines and in stories a ton, as they did probably starting in early April into mid-May. The market has gone completely the other way. It's been fascinating research by Charles Schwab. Shout out Jeff Kleintop, a longtime market expert. Digging into that research, phenomenal. So with trade war, as the trade war talk has died down over the past couple weeks, the market has come back. But now it's probably going to pick back up. You have to be worried if all those scary headlines written by us fellow journalist people could send the market lower. Disturbing. Be sure to sign up for the Street's Morning Jolt newsletter at thestreet.com/newsletters. Get it.